At what point should I dip into my savings in order to pay off my credit card debt? Thank you so much for this question. My name is Gaby Rincon. I'm a money coach and financial strategist. So a couple things. Obviously, we want to pay off our credit card debt as soon as possible because the interest rate, the APR, is really high. So it's very expensive. It's costing you a lot of money to be in that debt, right? You've also heard me say that you don't want to totally wipe out your savings in order to pay off debt because your emergency fund is your first line of defense against additional credit card debt. So like if something happens and you don't have any capital or cash reserves to use, then you don't have another choice but to swipe the credit card. Now, with that said, it absolutely makes sense to dip into your savings to pay off this debt if you're still going to be left with a nice, like, safe emergency fund. Okay, like if you're still going to be left with like a good 3 months worth of reserves, then it totally does make sense to do that. Now, obviously, without knowing all of the details of your financial picture and also your goals, it's hard to give you a super straight answer, but it seems that $50K is more than enough for a 3-month emergency fund and to pay off this credit card debt. And if any of these reserves were going to be used for something big, like, I don't know, home ownership, right? Like a down payment or something like that, then paying off this credit card debt will actually help you in terms of qualifying because it's going to free up a lot of your DTI, your debt to income ratio, which a lender will be looking at. In general, dip into your savings to pay off your credit card debt if you're still going to have reserves to fall back on. And the last point I'm going to leave you with is make sure that the reason for the debt is also handled, like the root cause. So if it was a lack of having funds and an emergency happened and that's why you had to like kind of bring up this debt, well, obviously you still have those reserves, so that's kind of handled. Now, if it was like a overspending or instant gratification, more of that kind of a thing, then make sure that you're looking at those emotional triggers, tracking any patterns, and look at that. Stop maybe using your credit card for a while in order to kind of come back, tighten up, and make sure that you're really living below your means. I created a really helpful resource, the Debt Payoff Strategy. It kind of takes you through different options for paying off your debt, like not only Debt Snowball, Debt Avalanche, but also other things like balance transfer cards and stuff like that. It's linked in my bio and it's only $9, so make sure to check it out if you're really excited about getting out of debt.